Welcome to our ACC 200 Financial Statement Analysis Project presentation. I'm Adam.
I'm Aracely.
Um, I'm Daniel. All right, this is my slide. I did PE and dividend yield. My source was Yahoo Finance. Shake Shack's PE was 78.55 with a dividend of 0%. Chipotle's PE was 47.23 with also a dividend of 0%. PepsiCo had a PE of 23.76 with a dividend of 2.7. What does this mean? This means that PepsiCo has the best value after investing and the only company that offers income. Chipotle, investors will see a strong growth potential at a moderate valuation. And Shake Shack has the highest risk with a very high PE and little to no dividend or income. Uh, Final recommendation for growth investors, choose Chipotle. If you want to see income or for a conservative investor, you would choose PepsiCo, and then a high risk investor would be Shake Shack, only suitable with caution.
Okay, so this is my slide, and I did market leaders and challengers. So for size, for PepsiCo, it's 91.9 billion in revenue and 99.5 billion in assets, which makes it the global leader. And Chipotle generates 11.3 billion in revenue and 9.2 billion in assets. So it's then it has a strong national presence. Shake Shack has 1.25 billion revenue and 1.7 billion in assets. So it's in the smaller scale. And for profitability, we have Chipotle in the 13.6 margin and strong cash balance, while PepsiCo has 10.4% margin and stable, but they're debt heavy. And Shake Shack has a 1% margin, so they're weaker in cash and higher debt. So some key points is PepsiCo's big, so they're the biggest company, steady results, but carries a lot of debt. And Chipotle is the fastest growth. They have the strongest profits and solid financial health, while Shake Shack has sales growing but profits shrinking and debt increasing.
For my part, I covered liquidity, solvency, and cash flow. Liquidity and solvency are important concepts when determining the stability of a business. Liquidity is a company's ability to cover short-term liabilities, and solvency is their ability to meet long-term liabilities. Current ratio measures liquidity by dividing current assets to current liabilities, as seen in figure 1 here on the slide. Chipotle and Shake Shack both have healthy current ratios between 1.5 and 2, with Shake Shack's being exceptionally high. This may be an attempt to remain financially safe during expansion by being conservative with assets. Chipotle's current ratio shows financial flexibility, which is common for established companies. For PepsiCo, even though their current ratio is below zero, meaning they have greater current liabilities than current assets, this shouldn't worry investors. They're extremely established with consistent cash flow and are able to cover current liabilities. Again, when looking at solvency, specifically debt to equity ratio, uh, PepsiCo has values that wouldn't be ideal for smaller companies, but because of their steady revenue, they're able to use a lot of leverage or debt financing. Chipotle also has a healthy to moderate ratio, and from 2023 to 2024, they use slightly less leverage, which indicates improving stability. Although Shake Shack's higher ratio implies high leverage, this should not worry investors, as it is necessary for growing businesses to rely on debt financing. Regarding cash flow, Chipotle has a high surplus of cash compared to capital expenditures. And for PepsiCo, this ratio is massive. This is common for established companies and allows them to pay dividends and manage debt. Shake Shack's ratio was much smaller, and their capital expenditures exceeded operating cash flow in 2023. However, they showed improvement in 2024 with a slight surplus in operating cash flow, yet their cash margin is thin.
Conclusion. PepsiCo has the best value play with the largest scale, steady profits, and only dividend income option. Chipotle is a growth leader with strong revenue expansion, rising margins, and solid financial health. Shake Shack has high risk sales growth, but shrinking profits and heavier debt burden.
Okay, so for the investor fit, so growth focus is Chipotle. Income slash conservative is PepsiCo, and high risk and speculative is Shake Shack with caution.
Overall insight, PepsiCo offers stability and income. Chipotle delivers growth and profitability, while Shake Shack remains a smaller, riskier bet.